So thank you so much for joining us, Mr. Scott. Just a few questions for you for the benefit of our listeners. If you could just share with us a brief summary about closed-end fund advisors.
So Closed-End Fund Advisors is a registered investment advisory firm that specializes in closed-end fund research and trading. About 25 years old. We have a couple opportunities that we work with. We both do data and research as well as consulting. We have 9 portfolio models that cover various growth and income objectives. The newest are BDCs, or business development companies, but we also do muni bond investing and then blended equity income or options for people. And traditionally, we take a secondary market approach. We look at manager due diligence, we look at dividend sustainability, and we look at relative pricing, so getting a good price for a good fund.
Great. And then also one of your topics of discussion, the advantages of tax-free municipal bond investing, is an issue of longstanding interest to many investors. What are some of these advantages?
So the closed-end fund structure, about a third of the funds are muni bond focused, about half state focused, half national focused. And what's really great about the structure is it's fixed capital, because muni bonds generally are illiquid in how they trade. So a closed-end fund muni manager can buy things and not worry about having to ever redeem them. Then he's allowed to use leverage, and most funds do use the leverage, and the leverage typically is very low cost. So normal leverage terms, 0.5% to 1.5%, not uncommon in the space. So it's a really low friction on an asset value. You then have this ability to have bought bonds in the past.
Sure.
And so right now, if you were to buy, for example, potentially a AA muni, 10 years out, you're gonna get maybe 2 in mid-change in yield. But the manager that's 90% investment grade has a blended portfolio yielding 4.2.
Okay.
So again, fixed capital, cheap leverage, the higher yield. So the total market price yield is a 6% average right now for the space. Yes, it's longer duration, but it's it's a lot of tax-free income.
Sure. And then how do these advantages compare with other investment opportunities?
So investment opportunities, so right now those funds are about 8 and change discounts, which is cheap. A lot of closed-end funds are currently at attractive discounts, also on the taxable bond side. So we've heard a lot today about senior loan funds being attractive, which have rising rate protection. But we've also heard like MLP fund, which is the panel going on right now, talking about how that investment's also very cheap. So the same idea of permanent capital, leverage, and good entry point is a theme of this conference today.
Great, fantastic. As 2015 approaches, what is your outlook on the potential performance of tax-free municipal bond investing?
So it's actually a really nice backdrop. So the credits of most municipalities from our manager interviews have said that improving. You've had less issuance of new muni debt in the primary market, so there's a bigger aggregate demand in the secondary market. We still have bonds being called and maybe not being reissued. So the net benefit to just having a more need for these funds, for the credits to perform well, defaults in the muni space historically are very, very low. So we see discounts cheap, and while investors still need tax-free income when you are in a taxable environment, one investment grade space, especially if you live in New York City, it's really, again, it's not going to be a straight line, but it's a very favorable trend both in the guts and in experience.
Great. Also, coming back to closed-end funds advisors, what is the management philosophy of the firm as a whole?
Yeah, so really as a whole, we're value investors. We try to marry both manager due diligence and then data. So we have 6 data analysts that do about 2,500 hours a quarter of primary data collection that powers all that we do. We then resell access to that, of course, but then we also interview fund managers. So it's through our newsletter, the Scott Letter. We'll pick up the phone and we'll spend an hour with the manager and then publish a nice interview about what he sees in his sector, what he sees through the use of the closed-end fund structure. And so we try to marry the data with the fundamental investment analysis to really provide a blended solution to our clients.
Sure. For investors focused on tax-free municipal bonds, how is your firm's management approach different than other firms in the same space?
Well, I mean, in a way, muni bonds are in some ways the most boring place in the capital markets. Not always. There's always a caveat in any investment discussion. But what we really do is, again, we look for the manager's performance to be good. We look for the market price to be relatively cheap versus its peers in itself. And we do a ton of work on the hardest part of all, which is dividend sustainability. So it's looking at how the earnings are coming in from the bond fund, whether they're adding to their uni or undistributed net investment income balance, or they're pulling from it. And by doing that, besides just the normal, does it seem plausible, allows us to pick funds that sustain dividends, that perform well, and that have up gravity in the discount.
Great. Also, what additional information would you like to share with our listeners about closed-end fund advisors?
Well, I mean, really, we really try to be an advocate for the structure in the sector. We try to produce about 2 articles a month through our blog at Seeking Alpha. We're trying to record some more videos ourselves as well on different topics. So I'd say closed-end funds are great for a good part of many people's portfolios, but they're not just regular funds. You need to know what the normal price range is for the sector and the individual fund, and you need to understand, is a dividend reliable, and you have to realize that these things, they are going to be a little more volatile because they're generally leveraged and generally owned by retail investors and generally don't trade as much. So be patient, be diligent, pick your spots, and do not use open market orders. or if you do, call me first.
Well, I'll be giving you a call soon. Last question for you before you head out. With the conference, obviously put together by Pristine Advisors, what do you think of the conference, and how do you think that it could benefit not only advisors but investors as well?
Well, they did a couple things well here. They really bring a blended discussion, both from the actual fund managers who are on the ground buying bonds or stocks inside their closed-end fund portfolios. They've done a phenomenal job just bringing the analyst community together at the major wirehouses, so they do a panel just for them. They have an advisor panel, which just gives that we're on later. It's this perspective of people who focus on the sector. So if you're looking for a place to learn about the structure, learn about opportunities inside the structure, and to really have a chance to see everyone in the community on a regular basis. And the last thing I'll say is the conference, while it's not as much fun, is webcast. Live and archive webcasts. So if you couldn't be here, if you're in Europe traveling for fun or whatnot, you can catch every important detail now or in the future in a way that you can at other opportunities.
Great. Well, thank you so much for being here today, and hopefully we'll see you next year.
Thank you very much.
All right, thanks.